When Nigeria introduced the microfinance policy, regulatory and supervisory framework in 2005, it marked the beginning of a new era in financial inclusion. The vision was ambitious to provide financial service to millions of economically active Nigerians who had long been excluded from the formal banking sector. This is the best thing that could happen to any growing economy, most especially one that have been underdeveloped for several years. Commercial banks were largely concentrated in urban areas, serving medium and large businesses. Meanwhile, millions of traders, artisans, farmers, transport operators, market women, small entrepreneurs had little or no access to formal credit. This is one of the biggest problems that the economy was having. And there came the Microfinance Bank. The Central Bank of Nigeria believed that a new class of banking, which is the Microfinance Bank, which metamorphosized from community banks, will breach this gap. And this is exactly why we have microfinance banks. The sector experienced rapid growth, hundreds of community banks converted into microfinance bank, while new investors entered into the industry with optimism. They felt, oh, this is a very good environment to tap in, we can change life, which was just a good thing. So the growth was just, astronomical. And by the early 2010, Nigeria had become one of Africa's largest microfinance markets. And we had people keep trooping in tens, in 20s, in hundreds, seeking for licenses just to operate in the Nigerian microfinance banking space. Then came the fall. Before the fall, CBN foresaw what might happen, so they brought in the Nigerian Deposit Insurance Corporation to be part of the regulatory system for Microfinance Bank, and this was precisely in 2027. Then in 2028, they extended these services to Microfinance Bank, all just to strengthen depositors' funds, which was a very good idea. Nobody was, people weren't envisaging that microfinance would be closing down. But it was a good thing. The CBN they foresaw this, in as much as Microfinance Bank are deposit taking institution, then the best thing they will do is to get NDIC involved in the process. That's why we had both CIBN and NDIC regulating the microfinance banks. Now let me give you a timeline. In 2010, there were regulatory issues. From 2010 to 2017, there were regulatory interventions that the CBN introduced. Why? They saw that a lot of microfinance banks started getting distressed. They saw the problem of underfunding. In this period, CBN placed several distressed MFBs under supervisory measures. Reasons being that there were a lot of problems, there were a lot of mismanagement, there were a problem of meeting depositors' funds. There were even problem of loans they were giving out and they couldn't get back. So what did CBN do? They tried to make sure that these banks are placed under supervision to see what they could do. There were correspondence back and forth, try and recapitalize. Your shareholders' funds have been depleted. A lot kept coming from CBN, but little or less was done to salvage the situation. Then, in September 2018, that was the first major nationwide license revocation that CBN introduced. What happened? CBN revoked the license of large numbers of non-performing microfinance banks. During this period, NDIC was appointed the official provisional liquidator, and they published the list of all the banks that have been liquidated in the National Gazette. This was a disaster for a lot of these MFBs, and I can tell you, nobody saw it coming. How I wish this was the end of it, but it wasn't. Next, in November 2020, we had the second major revocations, which has to do with 42 microfinance banks. 42 microfinance bank was also liquidated. Their licenses were withdrawn. They could not operate. NDIC also commenced liquidation and depositors reimbursement process. During this time, it was another big problem. Mind you, the first one that happened in 2018. Between 2018 to 2020, 2 years apart, we had several liquidations, and 2 years after that, we had another one, which was 42. This is not good for an economy going on at that. In 2023, May precisely, we had the largest revocations in Nigerian history. 179 microfinance bank licenses were revoked. Why? Along that, 4 primary mortgage institution licenses were also revoked. What is happening? This is a big problem. Nobody wants to start a business and see its money fail. Nobody wants to invest money in this microfinance and keep experiencing this problem. Which means whatsoever have caused the liquidation of the first set of the microfinance bank to the second one in 2020, which was 42, to the next one, which was 179 in 2023, must have been a big problem that microfinance operators, owners are not looking out for. Mind you, in April 2026, 89 of these microfinance had been liquidated. Meanwhile, in April 2026, NDIC announced that liquidation of 89 of the bank closed in 2023 was being concluded through purchase and assumption transaction and court supervised winding up. Okay, which means they are trying to give lifeline to those 23 out of those microfinance that was liquidated earlier on. Now, here comes the big bombshell. 1st of July, CBN revoked 46 licenses of microfinance banks in Nigeria. What is the problem and how can we salvage this? Let's get something clear. Microfinance objectives are clear. Number one, reduce poverty, promote financial inclusion, encourage savings, generate employment, support small and medium enterprise, improve access to credit. You know, all these things are good things. They are good. Then what exactly is the problem? The response is overwhelming. Investors want to establish microfinance banks and converted their licenses. And within a few years, all of the institutions were licensed across the country. This is good for the economy. Logically, any country that cannot invest in the active poor, it's going to be dwindling. So this is what Microfinance Bank was meant to serve, and this is what it was meant to achieve. But did it achieve the purpose for which it was established? As the industry expanded, cracks began to appear. One, weak corporate governance. This is one of the problems that we still have in Microfinance Bank today. Some people might shy away to say this, but I always say it. You don't put a square peg in a round hole, it won't work. We have a lot of commercial bank staff being given juicy position and spots in a microfinance bank which doesn't fit in. You cannot use the experience of a commercial bank knowledge to run a microfinance bank. I've seen it happen several and I've seen it crashed. I wrote it in my book. A lot of people wouldn't want to agree, but I tell you, microfinance bank is delicate and you need to be careful how to run it. You don't run a commercial banking transaction the same way you run a microfinance banking transaction. So we have weak corporate governance, we have insider lending, which is also a problem where loans are being granted and they are not getting back. We have poor loans appraisal, we have high portfolio at risk, which is known as PAR. I do some interviews up till date and you ask some people what PAR is, they don't even understand it. And we still have a lot of them in the industry. So all they just want to do is just disburse loan, get their, get paid at the end of the month and they are gone. We have problem of liquidity shortages, which have been addressed. Fraud is the major thing. Fraud, you can hardly tame fraud, but it can be managed. Majority of the things we do with fraud is we're always reactive rather than being proactive. Loopholes. Yes, there are measures being put in place, but we should be more proactive and learn from what has happened from a fraud instances so that we don't have a repeated. But what we get is we keep having a repetition of such instances. Weak internal control is one thing that have not also been, properly taken care of. Poor technology adoption. Yes, Microfinance Bank will tell you we don't have money to go into this yet. That's why up till date, majority of the staffs are still, getting collections by hand from customers. This has also been a problem. Then we have inadequate capital, which problem could be solved if you seek for investors to invest in your microfinance bank. But a lot are just so stubborn about that. They feel, oh, it's mine, let me just sit on it and enjoy it all. But it doesn't work that way. The CBN saw that there was a growing risk running microfinance bank the way that a lot of the management team are running it. So what did they do? They introduced strict prudential guidelines, enhanced corporate governance. They introduced a lot of trainings. They introduced risk-based supervision, which is what a lot of microfinance banks were trying to adjust to, but a lot were not even doing the right thing. Then they introduced higher reporting standard. What was this meant to do? This is meant to curb situation whereby management of these MFBs would want, to put some things under their bucket without leaving it to the CBN. So the reporting standard became a constant norm just to make sure that they don't derail and defrail from what they are supposed to do. Then another thing they decided to do was to increase focus on anti-money laundering. Several in the news, we saw a lot of MDs being sent to jail because they mismanaged funds that were supposed to be under their care. This could be terrible for an MD to, a lot of insider loans. You have situation whereby loan processing was done and not done according to laid down principle guideline, credit policies not being followed, which brought about a big problem with capital and liquidity issues. So these are some of the little things that CBN has tried to do to make sure that CBN, a microfinance bank, stay in check. But with all that, we still have these issues of microfinance bank liquidations popping up here and there. We've had the last one, 2, 3. I can bet you don't be surprised if another round of bank liquidations are coming up. But between me and you, I think CBN can do something better than just having these banks liquidated. One of the problems that microfinance bank faced that I can speak for is during the COVID-19 pandemic era. It created unprecedented challenges for customers. Microfinance bank experienced reduced loan repayment, business closure for some, rising non-performing loan. It was terrible. A lot had to, there were a lot of refinancing and restructuring of this loan during those times. Then, which automatically, it will affect profitability. So there was a decline in profitability, and it also increased operational cost. When you are not having income and you have to run this cost, it could be terrible. So these things were part of the problem that Microfinance Bank faced. Then that caused a little bit, bits of problem for them. Those that were able to keep themselves in check. Now this is the implication for continued liquidation. We can't keep doing the same thing all over again and expecting a different result. It's not going to happen, and it's not going to happen anytime soon. So the implication of liquidation on the economy is it will have negative impact on depositors' funds. Although eligible insured deposits are protected through NDIC framework, repeated failures can erode public confidence. People will not really want to have their funds in such microfinance bank, and the microfinance bank need both, except you are on an MFI where you are not allowed to mobilize funds for your business. Then you can be rest assured that won't be a problem. But as long as you're a microfinance bank, it's very, very important. Then other thing is that it will have impact on employment. Bank closure automatically leads to loss of jobs, and this is not also good for the economy. It's only make things worse for people. Now, in terms of investors having to lose what they've invested in a microfinance bank, it will further deplete the confidence of investors in investing in such. Rather, they will be looking for low risk yield transactions that will not really take much. But we know how it is for Nigeria from 2025. Why a lot of foreign investors trying to come in and trying to invest in. Yes, there are some still investing, but the drive has actually reduced significantly. Then other impact is on small businesses. If we have up to 1,000 microfinance reduced to 20, which means it will have effect on the breadth and the outreach, for these communities. It could be catastrophic, Then in terms of financial inclusion, what it will do to financial inclusion is that it will reduce the iteration of financial transaction, which means there will be slow growth. It will not be able to go around the way it's supposed to go. I'm trying to use layman language so that we understand how we can actually have impact. What is financial inclusion meant to achieve? It's supposed to make sure that everybody in an economy is enclosed in a case where you can transaction electronically and at the right time with much more security. That's what financial inclusion is trying to build. Okay, then we have industry consolidation. When there's growth in an economy, people have this confidence of a particular sector. But right now, that's not what we are seeing. The confidence in the Microfinance Bank is gradually dwindling, and a lot of people are having the second thought: should I go into it? Is this something I want to, really do now? There's just this big thought around it that is making people take a second guess about running a Microfinance Bank. Now, let's go to the big question. What should the Central Bank of Nigeria do about these frequent liquidations that we're having 2 or 3 years apart? Number one, I will talk of early intervention framework. The more people get, this news about banks are liquidating every 1 year, every 2 years, it's kind of eroding investors' confidence. So why don't we have this intervention framework where after the correspondence between the central bank and the microfinance bank to show their capital that has been eroded, nothing is happening. The same way you treat commercial banks, why don't you have framework that gives room for forced investors, to be part of that microfinance instead of totally winding down. That's just what I'm just going to mention this in briefs. A wider topic will give us how this could be done. Another thing that can be done is to encourage voluntary mergers and acquisitions. A lot of people want, people to invest and partner, but they don't even know the right channel to go about it. The CBN could be a bridge across the divide. Let's look at how or who can be matched up to make sure that this works out. Another thing is they could be faced with capitalization roadmap. At the end of every year, why don't you show up your capital so that it puts you in a better position for future occurrences? This helps. It can be mandatory, between every 1 year, every 2 years, the Microfinance Bank will put this in place. It could be more of contributions towards recapitalization. This is one thing that I know will help. Then another thing is expanding technical assistance. A lot of microfinance banks still run brick and mortar. We have customers coming in and going out, which has given room and increased fraud tendencies from staff, from management. When we automate this process, does it mean there's not going to be cyber security threats when it comes to digital infrastructures? No, there will be, but we will still have it more controlled, and we will know that once it happens, it's being controlled. It's more like a controlled demolition where you understand where it's coming from. Okay, so technical assistance can come where CBN introduce governance structures, enterprise risk management, cyber security structure, digital transformation, compliance structures, just to make sure that there's assistance every now and then, not just to leave them. The only time you are hitting the hammer is when you go for inspection and you hit the hammer and you keep, making things difficult for Microfinance Bank. Then what about promoting shared infrastructure? This will also strengthen Microfinance Bank. Instead of having MFBs have to build their platform on their own, they could have shared infrastructure subsidized by even the government if possible, where digital infrastructure can be acquired without stress and without much cost. Then another thing is we have weak management team. I've been a consultant in the Microfinance Bank for years, and I've seen that a lot of MDs that are MDs right now are not supposed to be. They don't even have the prerequisite. Logically, you shouldn't be working in a microfinance bank if you don't have the microfinance education program introduced, that's managed by the CIB and Chartered Institute of Bankers of Nigeria, but that's not what we have. There are some training that every staff is supposed to go through. There are some training that the directors even are supposed to go through. There are some training that the management staff are supposed to go through. Yes, they see this training as more of leisure time visitation, where they take these things lightly, and majority of these things, play a long role in knowing the caliber of the management that's going to be the end of affairs. We've seen in the news severally where a lot of people a lot of MDs are being remanded for stealing some large sums of money. Okay, so we have quite a lot that can be done that the CBN can do, instead of leaving the Microfinance Bank to just fade out like that. Is not good for the economy, and it's not also good for them as well. I know this discussion has been engaging, and you've learned one or two from it. My name is Henry Oster Onyema, Freon Consulting. I can tell you it's been a wonderful time having you. You can go through a lot of videos we have for you here on microfinance and microfinancing. I can tell you it's going to be a blast for you. If you really want to see what else we do in other of our videos, you can check the description box. I will always encourage you to subscribe to our YouTube channel, follow us for more, turn on all your notifications so that as soon as we drop more video content for you, you will get it at the right time before the feeds override them and you won't be able to see them. So nice having you here today. I'll see you in some of our numerous episodes that we have. Just make sure you follow us. My name is Henry Onyema, and nice having you on board.